Good morning, Facebook. Jerry Heiderscheit, 1 Minute Mortgage Pro. Short video. We'll talk a little bit about rates and a few things to watch for. Often, I will talk to somebody who just got off the phone with another loan officer who had called them from another company. They had a 10-minute conversation. They've already got a pre-approval letter in hand. They already know what their rates are going to be. They're already shopping for a house. And that's a little bit unrealistic, to be honest. So a lot of companies, what they'll do is they'll actually send you a pre-approval prematurely because, again, once you find out that you actually need to start to get to gather a lot of documentation, tax returns, driver's license, social security, all this stuff. When you talk to someone like myself who says gather these documents and then I'll get you a pre-approval, the idea is that you're going to turn around and go right back to that initial company. So they kind of use it as a hook. And that's just their business model, and that's fine. But what I want to warn you about is that you need to understand that if they haven't pulled your credit, they really don't have any business quoting you a rate yet. A lot of times the rate will look really good, but your APR might be really high. See, things that you can do to make a rate look good is you can actually buy down your rate. So let's say that you were quoted a 4.5 interest rate and you didn't like it and you really wanted to be at 4, well, we can actually look and say, okay, we can get you to 4, but it's going to cost you this much money. So maybe paying an extra $1,600 will get you down to a 4.0 rate. And that's what you were looking for. That's an option. But some lenders won't tell you that, but they want to have a very competitive rate. So they'll just simply add that $1,600 to your closing costs without mentioning it. And then you have a really good rate. So then when you come talk to somebody else and we say, yeah, we got you at 4.5, you automatically want to go back to that original lender because the rate is so much better. You didn't know that you're paying for that rate. So we can do the same thing. Any lender can do that. It's just these are the questions that you want to ask. How much did that rate cost me? Right? And then you want to compare your APR. Did they add a whole bunch of extra fees and stuff to this as well? So you want to look at that also. And then just the kind of the rule of thumb is if you don't have a whole lot of documentation in the hands of the loan officer and they're already quoting rates and giving you pre-approvals, it is a paper thin pre-approval. So the more documentation that you put in our hands, the more solid your pre-approval becomes. If they're very quick to send you a pre-approval, I would just be leery. So just kind of a heads up. If you have any questions, give us a call, shoot me a text, hit me up on Facebook. I'm happy to answer them. Hope you guys have a great week. Happy Monday. We'll see ya. Bye.